You've got 7 of the 10 largest uranium producers in the world currently shut in. The supply destruction, the rising prices will lead to more and more utilities realizing that they just can't continue to consume their own inventories. And the only thing that's really going to matter is who can ramp up production first, what your cost of production is. We believe that we can ramp up faster at lower cost and with less dilution damage to our shareholders than any other company out there.
Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up and do leave your comments below. It just helps us understand what you're thinking, what questions you'd like us to ask, and indeed your thoughts on the company. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, if you want to see more videos like this, click the notification bell. We spoke earlier today to Jeff Klenda, who is the CEO of URE Energy. Now, they've had quite an interesting time over the last 3 or 4 weeks since we last spoke to Jeff. We discuss all of the shutdowns. We look at pricing in the marketplace, and he talks to us about a working group announcement later this week, potentially. Anyway, take a look in the description below because a few other things we discuss. Anything that interests you particularly, click on the timestamp. That'll take you to that part of the video. Let's hear what Jeff had to say. Hey Jeff, how are you, sir?
Doing great. Thanks for joining me in my home office / library. I don't get many visitors these days, so nice to have you.
Yeah, I'm impressed with that that book collection there. So who are those guys on over your left shoulder in the photo?
Yeah, been working on it for years. I actually have read a good number of them. Though I don't get much time for pleasure reading these days. No.
I was just asking you, who's the photo of behind you on your left? Who are those 4 guys?
Actually, that's a couple of senators that shall remain nameless.
Really?
This time, if that's okay.
I wish you had a high-res camera, but you don't, so I can't work it out. Hey, look, so we had a great conversation when we spoke, I guess about three weeks ago now, but also lots happened. A lot's happened. We've had Cigar Lake gone down into indeterminate closure. Kazakhstan has closed down for 3 months, possibly longer. They'll review at the time. Namibia, Rossing, Husab, closed down. BHP, Olympic Dam, closed down. Has had reduced output. There's a lot of pounds just came out of the market since we last spoke. I don't even want to ask you this next question, but what do you think that means for you?
Well, if you believe the numbers, then approximately 46 million pounds in aggregate have come out of the market. That's primary production in less than 30 days. That's approximately 35% of global primary production. So what it means to us immediately, of course, is that whether or not the entire economy or the economies of the world will experience that V-shaped recovery, we don't know. But in looking at our chart, we certainly have. From our bottom, we've recovered 100%. From that time, so it's nice to get that pricing back in the stock. And I think that based on just the production and the supply that has come out of the market to date, I believe that we're in a position where we can move up to and perhaps beyond $35 a pound. The last time we were at $40 a pound as an industry on spot price, our stock was at $2.40. So we're at 55 cents US right now, and so I would certainly take that any day. But I think once you break above certain of these psychological barriers, like getting past 30 was a challenge. Now you break above 35, I think 40 comes quickly, and look, the utilities have been paying average prices of above $40 a pound on, for some time now. That was their average. It was something like $42, $43 a pound for 2019. So we're not exactly in uncharted territory. These are prices that the utilities are comfortable with, and so I think that we finally have broken out of that kind of flat line that we were in. We weren't able to break out of those collars kind of between, say, $24 and $26 a pound. And now to finally break out of that, I would have preferred that it happened, outside of, a pandemic, but, will certainly take the rise in equity pricing, and I think that there's so many things going on right now that the rising prices should actually provide impetus to the utilities to perhaps enter into more aggressive contracting. I have fielded 4 RFPs since the beginning of the year. I've answered all of them. None of them have quite been at levels where we could aggressively bid to them, but it's nice to see those RFPs coming into the marketplace, and I think that the supply destruction, the rising prices will lead to more and more utilities realizing that they just can't continue to consume their own inventories, which of course they have been doing for about 2 years now.
They have, and they're due to let everyone know, what their inventory levels are at, and that's one piece of the chessboard which will be revealed to us. But these RFPs are just feelers. They're trying to get a sense of what people will want to be getting. So that's just them, dipping their toe into the market. And it's only been a couple of weeks since we've been over the $30 barrier. How long do you think they will wait before they realize that perhaps? I guess what I'm trying to work out is, do you think the price will drop and fall back again if there's not some more imminent movement by the utilities? If they do sit back and wait and trying to work out what is going on, get a feel for this, do you think that the price will drop again? I think that'll send negative messages into the market, or do you think that the impetus will be sustainable?
Well, you know what? That's a great question, and I think unfortunately one that's really unknowable right now, because there's too many players that it's contingent upon their activities, and let's face it, most prominently is Kazakhstan. It's nice to see them suspend operations, albeit for only a 3-month period of time. We'll certainly take it. By their calculations, they believe that's going to bring that will reduce their overall 2020 production by about 10.4 million pounds. We would love to see that. Whether or not, if they restart production, or if this turns into a very short-term shutdown of all of these facilities. Remember, you've got 7 of the 10 largest uranium producers in the world currently shut in. 7 of 10. So, it just depends largely on what the Kazakhs do, but I think it's a little more difficult if you're Cameco to shut down a cigar lake and then reopen it in a flash. I mean, you're laying off a lot of people. It takes a 6 months period of time to even recover the severances that you gave them usually. So typically a shutdown of that size does not come back on right away. A state-owned enterprise like the joint ventures that the Kazakhs have, that's a bit different. This could be something that could be short-lived, but again, I think that there's too much going on at the federal level with the United States government, well,
let's talk about that
along the lines of.
Let's talk about that, Jeff. Let's talk about that, because there's rumors. Working group. What do you know?
What I've heard, and this is a rumor, so let me qualify that, is that we could see something out of the working group this week. Now we've heard that many times before. That's I hate even saying anything about that or passing it along, but it does make some sense. And as we were discussing prior, there is right now an incentive, and there is, I think, a mindset among a number of the agencies, whether that be commerce, energy, or defense, or members of Congress, high-ranking members of Congress, that are paying very close attention to this, that a more holistic approach needs to be taken. And of course, that's what the working group is all about, is that we're not just looking at the uranium producers, we're going to look at the entire fuel cycle. Well, if you're going to do that, then you have to look at not just the recommendations or the report that the working group is going to release and what recommendations that might provide or what relief that might provide. You also have to be looking at the Russian suspension agreement, which comes up for expiration at the end of this year. But then in addition to that, there is draft legislation out there by Senators Barrasso out of Wyoming and Heinrich out of New Mexico that will call for substantially lower levels of imports coming in from Russia under the suspension agreement, and they would decline each year after that. So it makes some sense that you would want to get that report out there if you're going to look at these things in the aggregate and say, okay, how do we preserve the fuel cycle? What makes sense for the entire industry? So would I normally believe that they would come out with the report in the midst of battling the coronavirus and the economy being shut down? No, I would not. Do I think that it's possible that they would need to, so that they could make it part of a larger strategy that would include some of these multiple phases of these stimulus packages, so that you can, in effect, preserve the entire fuel cycle, and you have to have the recommendations of the working group to know what they're thinking and how they intend to go about that? That I can see that. So whether or not we'll get anything this week, I don't know. I'll believe it when I see it. We are talking government after all. But I'm happy to hear that we may see something soon. And we were, let's face it, before the lockdown, we were promised by the Secretary of Energy that it would be out that day or the next day. And unfortunately, that week turned into a week where so many things just deteriorated with respect to the COVID-19 and the economic shutdowns and all that it meant. So, of course,
and
we wait.
So it's not just utilities that perhaps are going to be nervous about this. We'll use £46 million coming out of the market. It's the US government seeing what COVID is doing across the board. There's this huge, never seen before type of huge stimulus package which the US is implementing. And I guess there's a lot of hands being held out to get a piece of that, right? So energy security, obviously critical to them. Do you think that this has been what they needed, the kind of kick up the butt that they needed to kind of get their plans in order?
Well, I think it is, and as we were starting to go down the road of talking about their inventories. If you look in November, very beginning of November, I attended a NEI conference in Nashville where you had a representative of the Department of Energy there talking about the current status of domestic inventories in the United States, and they were talking about how 2 years earlier the U.S. utilities had in-house inventories of 2.9 years, which is the way they express it. And that now, at that time, at the beginning of November, it was now at 2.1 years. And you got to think that over the last 5 months, that has declined a bit. So you're probably at no more than 2 years. You may even be at under 2 years of inventory for the utilities. So they have chosen to consume their own inventories rather than go into the market. How long you can continue to do that, I don't know. And for the 2 years prior to that, well, the reason why the utilities weren't in the market was ostensibly because they were awaiting the outcome of Section 232. Well, then, of course, Section 232 morphs into the working group. Then you've got the Russian suspension agreement that's coming up for renewal and expiration. And then, of course, you've got the Iran sanctions with the Iranians busily producing fissionable material and coming closer to actually having a nuclear capability with every passing week. So I think that there's always going to be a reason for the utilities to take a wait-and-see approach. But I think that you get to a point where the majority of our nuclear power plants are in regulated markets, meaning that they are overseen by public utility commissions. And those public utility commissions are the ones that grow very uncomfortable with thin inventories. They like to know where the fuel's coming from for the next couple of years. Frankly, I'm surprised they've let them get this low.
Why hasn't the US government or the DOE, Department of Energy, talked to you? If there's something coming out this week with the working group, you're one of the two petitioners, right? You're the guy that kicked this thing off. Why are they not talking to you more? Have they got everything they need from you? Why are they, I'm just sort of intrigued as to the process.
When it first started back at the very beginning of August, we knew when the reports were, they broke the working group up into 4 separate groups. And one was for uranium, one was for conversion, one was for enrichment, one was for fabrication. And we, of course, weighed in. We formed what we called our industry core working group that represented every phase of the fuel cycle. And so what we did is we submitted our own report. We also had the advantage of working with a very good defense contractor at the time that gave us a good idea of what perhaps the federal government's needs would be in terms of nuclear fuel in the 10 years to come. And so we were able to really tailor our industry core working group recommendations that we submitted to the nuclear fuel working group, the president's working group. And we also tailored it to, with respect to the programs that we knew that they had available, whether that's the Assured Supply Act or the Defense Production Act. And so we were able to state to them, look, here's a way that you can support the nuclear fuel cycle, whether it's the uranium producers or the converters, and here's where you can get the money, here's where it's readily available by the president, by presidential decree, would not require appropriations. We were a bit surprised, frankly, when the first thing to come out of the working group was the 10-year appropriation of $150 million. Now, that's something that has to survive the appropriations and budgeting process. Whether or not that comes out the way we want it to, we don't know. But we'd sure like to see the rest of the report, because what we're hopeful of is that there's short-term relief in there. And what I mean by that are either tax credits that we would have that would level the playing field between us and wind and solar, and even natural gas to a limited extent. So we would like to see some short-term activity there. Other things that we know are part of some of the short-term recommendations that have been made are that they would buy, for example, our inventories. Well, there's only two companies that have inventories right now, ourselves and Energy Fuels, and buy those inventories at above current market prices. That would provide short-term relief, and it would serve to replenish the diminishing government stores that, I mean, let's face it, we've been living off of, and we've been consistently depleting Cold War inventories for some time now. And so it would be a way for them to bring in material instantly, give us short-term relief, while we're watching some of the other recommendations play out. Okay.
Well, let's see what happens. Like you said, you did preface it with its rumors and its government and so forth. But I wanted to understand how you're feeling now about this. Let's say this let's say this working group doesn't come out with anything this week, and we just go back to life before that rumor. And you've done your SBA payroll protection, which, like, you know, if you can, you should. You've got this big inventory sitting there. It has a balance sheet value for you. We talked, I think, extensively, and you were very robust in explaining the processes which you'd put in place to ensure, you know, the company moves forward in the best foot forward basis. I'm interested in, how do you feel now, 3 weeks after, with all of these things which have happened in terms of taking pounds out of the market? How do you feel about your ability to position your company as one of the early beneficiaries of this market conditions? I'm not talking about the market as well. I want to work out who's going to win first.
Well, I think that you know, I've been stating consistently that this is going to become a very fundamental market. I don't think that pounds in the ground are going to count for much of anything. That may have been in the last cycle that they did. I think that now we're going to become a very fundamental marketplace, and the only thing that's really going to matter is who can ramp up production first, what your cost of production is, how quickly can you make deliveries into contracts that you may receive. So we have stated for some time, we believe that we can ramp up faster at lower cost and with less dilution damage to our shareholders than any other company out there. I can at Lost Creek ramp to, for example, 1 million to 1.25 million pounds a year, and I can do it in a 6 to 8 month period of time. So we can, and that's because everything's already there. The header houses are there. The mine unit is directly adjacent to an existing mine unit, and everything flows directly into the plant. And I can ramp that up for about $15 million. In mining terms, that's nothing. That's pocket change. And I can follow that on with a second facility, Shirley Basin, which already has an NRC license, by the way. I have to build a satellite plant there, but that's going to cost me about 25 million. But that would come online in about 15 months. So by the time I would get 2 years out, a year and a half to 2 years out, I'm fully ramped to a 2 million pound per year run rate. And we know based on our past production, look, we've experienced over 92% recovery rate at Lost Creek. That's absolutely unheard of. Even in Kazakhstan, nobody gets 92%. But we have accomplished that in our first mine unit at Lost Creek. So we know that it's just a beast of a property. We can ramp it up quickly. Shirley Basin is 4 times the grade, and all of this can be done over a 2-year period of time, in about a year and a half period of time, for right at 40 million. And if we have the contracts in hand, then I can do that either entirely with debt financing, or I can do a combination of debt and equity, depending on where our shares are trading and whether or not we feel that it's advantageous to go ahead and accept some dilution for the money that we need for ramp up. But we've already taken the precaution of making sure that we have both lenders at the ready and funds that want to participate in our ramp up and would come in on an equity basis. So we feel that we're very well prepared. If nothing happens, worst case scenario, nothing happens with the Iran sanctions, nothing happens with the working group, nothing happens on the Russian suspension agreement. All it means is that I'm in the same position tomorrow as I am today, and that we've been in for the last 10 years. And eventually we won't have contracts. Even Cameco is running out of contracts. We're at the end of the contracting cycle. We need to begin a new one. But it would simply mean that, you know, I would be left with our runway, which, as I stated, takes us through to about the middle of next year. So we're in good shape. We've got time to work with, and we're confident that something's going to break and something's going to come of this. But when you know, I've kept on 20 people at the plant, so I've got my operational staff at the ready. They are there. They will serve as the foundation on which I will expand that employee base and to ramp up production, because we'll probably have to ramp up to about 75 guys at the plant from the 20 that are out there now if we ramp up to 2 million pounds per year. And you know, look, and that's no stretch for us. 4 years ago, we had nearly 100 employees. Today, we've got 30. So we're ready to go. We've got our operational staff in position, and we've kept the best of the best.
Okay, so thank you for that. Remind me and remind people again, what is the price point that you think you're going to need to get on some of these early contracts? Now, clearly, obviously, as time goes on, the contracts will be at different terms, different prices.
No, that's it.
So what would you aim for?
It's a good question, and look, when Tim Gitzel was asked that same question, what would it take for him to restart production in the United States? He said he wouldn't. He said he'd need 60 or better, and I'm pretty comfortable with that number. Obviously, we have demonstrated that we can get by at $50 contracts. Remember, since Fukushima occurred, which was 9 years ago at the end of middle of last month, we have only raised $22 million in the market via equity over that 9-year period of time. Compared to any of our peers, they are many multiples of what we've had to do, of the extent to which we've had to dilute in the market. So we're very confident in our abilities. I can probably get by on $50, $55 contracts, but you have to remember when you're ramping up from really just pretty much a care and maintenance status, which we are at today, you have to factor in capital, CapEx recovery, exploration and development to replace the pounds that you are producing, and you have to build in an acceptable rate of return for your shareholders. So I'm more comfortable saying that we really need contracts in the $60 to $65 range. And let's face it, only 5-6 years ago, the average price that the utilities were paying for a pound of uranium was upwards of $56, $57 a pound.
Okay, understood.
So this isn't uncharted territory.
It is, it is. One last question, Jeff. Since we last spoke, have you had conversations with your buddy down the road, your co-petitioner, with regards to the mill? Because we saw the announcement, and we spoke very quickly with Mark about his foray into rare earths processing. So he's obviously looking to try and capitalize on the mill by putting product through it. How are those conversations, and when would you expect to have them if you haven't already done so?
Well, we talk to the guys at Energy Fuels all the time. For one reason is we are both interested parties in the Russian suspension agreement. That's a status that you actually have to file for legally. And so we are united in our position with the Department of Commerce, with the Russians on the other side of those negotiations, and we talk to them on an ongoing basis. We want to make sure that the outcome of the Russian suspension agreement is one that is certainly no more harmful to the domestic producers than the existing one has been, which has been in place for 28 years. So we talked to them on an ongoing basis about that. Of course, we submitted when we were the industry core working group and submitted our recommendations to the president's working group, we did that jointly with Energy Fuels and others in the fuel cycle. So virtually everything that we do, we're doing with the guys at Energy Fuels. We have a great working relationship with them. And they're not the only ones looking at rare earths. We're looking at rare earths on our property ourselves. It's nothing we've announced. It's in the very early stages, but rare earths are everywhere. And that's something that may be a future endeavor of ours as well. We also have a gold property that we're hoping to do work on here within the next month or two. We've just been waiting for the weather to change out on the site. So we talk to them on an ongoing basis. We work together on all of these things, and as the two remaining producers, we have to work together. We have to stick together, and we're gonna. I think they just did a financing back in the first quarter, and so I think they're in good shape through the remainder of the year. We're in good shape through the remainder of the year and into next year. So I think that you've got the two remaining producers in about as good a shape financially as we can be. And if we get the relief on any of the fronts that we've been discussing, obviously, my objectives very simply are that I would like to have new contracts in place before the end of the year.
Fantastic.
There it is.
Fantastic.
That's what we need. That's what Energy Fuels need. And anybody else purporting to be a domestic producer in the United States, we need contracts. We need that new fuel, that new contracting cycle to begin.
Jeff, I thank you very much for today. It's exciting times for you guys. I guess it's not for all the wrong reasons, as you say, but it's exciting times for uranium CEOs, and share price is creeping up, which is lovely. We'll see what happens this week with the working group, and pick up that phone again if you hear anything.
Well, we hope that both the working group and suspension agreement will result in something over the near term. Let's just call it next 60 to 90 days. If that's the case, I'll be in touch, and we'll do this again. Always a pleasure. Thank you very much, Matt, and thanks for giving me the platform to discuss the industry and our story once again.
Truly, the pleasure is ours. Thank you very much, Jeff.